What does it take to turn pocket change into billions? Ask David Tepper, the junk bond king who earned the nickname the Appaloosa of Wall Street. His bold bets and killer instinct transformed a few $1 million into one of the largest personal fortunes in finance. Buckle up as we explore Tepper's golden touch and the wild ride that turned this middle-class kid from Pittsburgh into a hedge fund legend. You'll discover the gambles that paid off big and the philosophy that guided it all. David Tepper is one of the wealthiest and most successful investors of his generation. The founder of Appaloosa Management started out trading junk bonds in the 1980s before making a fortune betting on distressed assets. By following a contrarian philosophy and his nose for value, Tepper generated incredible returns even during the worst financial crises. His multi-billion-dollar net worth affords him rock star status among hedge fund managers. In his book, The Golden Touch, Tepper reveals the risky moves and investment strategies that paved his path from modest beginnings to mammoth wealth. Join me as we uncover key moments in Tepper's career and the bold thinking that produced consistent wins. You'll learn how a middle-class kid from Pittsburgh earned the Midas touch and a place among the greatest money managers in history. David Tepper, the billionaire founder of hedge fund Appaloosa Management, is one of the most successful investors of modern times. His contrarian investment approach, nerve, and ability to profit from the misery of others earned him the nickname the Appaloosa of Wall Street. Tepper's book, The Golden Touch, chronicles his rise from middle-class obscurity in Pittsburgh to legendary investor with a Midas-like ability to turn financial dross into gold. Tepper displayed his investment acumen at a young age. As a student at the University of Pittsburgh in the late 1970s, he made his first killing in the stock market. After college, Tepper worked as a credit analyst for Equibank, developing his expertise in bonds and credit analysis. He moved to Goldman Sachs in the 1980s, just as the junk bond market started heating up. Junk bonds, or high-yield bonds issued by companies below investment grade, provided huge profit opportunities for gutsy investors. Tepper bought junk bonds for Goldman's proprietary trading desk when others fled. His appetite for risk paid off enormously when the bonds he snapped up cheaply soared in value. By purchasing depressed bonds from airline, auto, and steel companies near bankruptcy, Tepper raked in giant returns. Tepper shone brightest as a junk bond trader during the savings and loan crisis of the late 1980s. He correctly judged that default rates would stay low despite the crisis, so he loaded up on junk bonds when others dumped them. It was a tremendously lucrative move that cemented Tepper's reputation on Wall Street. In 1993, Tepper left Goldman to launch his own hedge fund, Appaloosa Management, with $57 million in capital. He generated huge returns by investing in unfashionable and distressed companies. His philosophy was to buy when uncertainty and fear shrouded a company or industry, betting that assets were undervalued. One of Tepper's trademark early successes came from buying steel companies' debt in 2002, when the industry was depressed. He saw value in the hard assets, and profits were soaring after bankruptcies cleaned up excess capacity. True to form, the steel industry rebounded, and Appaloosa made a fortune. But Tepper's crowning achievement was the huge bet he made on beaten-down financial stocks during the 2008-2009 financial crisis. While others fled financials, Tepper invested billions in big banks like Bank of America and Citigroup, certain they were oversold. When the stocks recovered as the market stabilized, Appaloosa made $7 billion in 2009 alone. What makes Tepper such a brilliant distressed investor? He does rigorous fundamental analysis to estimate intrinsic value, buying securities trading far below what they are really worth. His courage allows him to take concentrated bets in out-of-favor companies and hold through volatility. Tepper also readily admits mistakes and changes course when the facts change. This flexibility helps him limit losses and ride big winners for maximum gain. While David Tepper built his fortune largely by investing in distressed debt and equities, his approach evolved over time to capitalize on macroeconomic trends. Tepper was nimble enough to adjust his strategy to profit from major shifts in the global economy. In the later 2000s, Tepper transitioned Appaloosa into a global macro hedge fund, making huge bets based on interest rates, currencies, and commodities. The financial crisis provided fertile ground for macro trades as central banks slashed rates to zero and began quantitative easing. Tepper expanded beyond distressed debt and stocks into macroeconomic investing over time. In 2010, for example, he predicted the Fed would embark on QE2, sparking a commodity boom. He purchased stakes in energy companies and oil futures, profiting handsomely when oil prices spiked. Tepper correctly predicted in late 2010 that the Federal Reserve would embark on a second round of quantitative easing, dubbed QE2. He reasoned that pumping trillions of dollars into the financial system would spark inflation and drive up hard asset prices. So Appaloosa bought substantial stakes in energy companies as well as oil and gas futures contracts. When the Fed followed through on QE2 and energy prices spiked, Tepper recorded huge returns. Currencies provided another profitable avenue for macro trades. One of Tepper's best currency plays came from going long with the Mexican peso in the early 2000s. Appaloosa purchased sizable stakes in Mexican government bonds denominated in pesos. When the peso strengthened, the bonds appreciated considerably, earning billions for Tepper's fund. Appaloosa also made profitable macro trades based on interest rate expectations. In 2013, Tepper foresaw that the Fed would not taper bond purchases as quickly as the market expected. He bought treasury bonds in anticipation of rates falling, which sent bond prices higher and again resulted in a windfall. Tepper even scored wins trading macro themes through equities. In 2016, after most investors dismissed the likelihood of a Donald Trump presidency, Tepper bought substantial positions in financial and pharmaceutical stocks in anticipation of Trump winning and cutting taxes and regulations. Post-election, these sectors soared and cemented huge returns. Even when trading macro themes, Tepper never abandoned his value-focused roots. He made sure that fundamentals were taken into account for macro trades and that individual securities were valued accurately. This discipline prevented chasing momentum without an underlying rationale. Appaloosa has compounded capital at an astonishing 25% average annual return since inception. This turned Tepper's original $57 million fund into $17 billion at its peak. His personal net worth topped $12 billion, earning Tepper a spot among the 50 richest people in America. Notoriously tough and demanding, Tepper ran Appaloosa like a dictator. He scrutinized even tiny expenses and fired employees on the spot for perceived infractions. His tirades were so infamous that staff had safe words to get him to stop yelling, but he rewarded loyalty and performance extravagantly with huge bonuses. Despite his wealth, Tepper lived modestly with his family in suburban New Jersey. He donated generously to schools and charities, including a record $55 million gift to Carnegie Mellon's business school, now named after him. David Tepper's incredible investing journey proves how enormous wealth can be created from humble beginnings with discipline, courage, and contrarian vision. By buying when others are fearful and selling when greed takes over, Tepper forged an unparalleled record of profiting from distressed opportunities. With his working-class background, Tepper relished proving wrong the Wall Street establishment that looked down on him. His golden touch turned junk fortunes into billions and transformed Tepper into a true investment legend. Tepper's willingness to shift his fund strategy demonstrates his flexibility as an investor. He developed expertise across numerous asset classes, including stocks, bonds, currencies, and commodities. While his early career focused intensely on distressed debt and equities, Tepper gravitated toward bigger-picture macro themes as his fund grew. His success trading macro themes shows Tepper's ability to foresee major policy and economic events before the market. He understood the implications of unconventional Fed policy earlier and more accurately than most. This allowed Appaloosa to make trades with a huge advantage over other investors, contributing greatly to the fund's returns. Toward his retirement from Appaloosa, Tepper became concerned with the growing distortion of equity valuations due to quantitative easing and low rates. He warned that markets were elevated beyond reason based on fundamentals. True to his prudent nature, Tepper returned billions to Appaloosa investors and increasingly moved to cash to protect against a bubble. While known as a risk-taker, Tepper never forgot the importance of capital preservation, especially later in his career. The macro space afforded large potential rewards, but Tepper always exercised caution and calculated bets based on probability and payoff. This helped ensure he never put the entire fund at risk of ruin. Even after retiring, Tepper continues to actively analyze and invest in markets. He shares market views on TV and in investor letters, showing an inability to completely cut ties with the investing game. No matter his other pursuits, like sports team ownership, Tepper remains grounded in fundamentals and focused on uncovering mispriced opportunities. Tepper officially retired from Appaloosa in 2019 to focus on sports and philanthropy.